them, and he has inspired every single DSAP participant that has listened in to his presentation and his advice. So everybody, Waverly Robinson.
Hey.
Whoa.
Great afternoon. Great afternoon. Far, you mentioned, do I have to mute my audio? Was that what you were saying?
Unmute. So I couldn't hear you
Unmute.
at first, but we can hear you perfectly now.
Perfect. No
And then
worries.
one more thing, if you want to share your presentation, you can do that as well, or we can do it for you. So whichever you prefer.
I would love to share. That is, I can control that. No worries. I got it. Let me do that now. And while I'm greeting you, great morning, everyone, a great afternoon. My name's Wave Robinson. I want to get the presentation up just so I can actually do my intro. I'll just make sure I'm grabbing this correct. Perfect. Share full screen. And a little bit about me. My name is Wave Robinson, everyone. I was born and raised in the county of Dade. If you ever heard it said that way, I'm from the 305, the bottom, not South Beach though, not South Beach. Let me just say that part. I'm a proud HBCU grad. I was a former wealth advisor for Charles Schwab in the early 2000s, and I did a short stint at Fifth Third Bank as an investment banker as well. And we founded Kingdom Financial Solutions back in 2005 to help families and individuals just like you. And so what we do every day is we help individuals and organizations grow, maximize, and create freedom. So we will talk through that a little bit today as we go through some of the technical things. I will do my best to make sure things land at home. And so this is my family. The boys are all adults now and in college, and all of that's happening. My daughter's 16 and my little man's 11. My wife and I celebrate 21 years married next month, still February, still January. So yeah, February the 15th, celebrating 21 years. So just excited to look ahead. It's like almost a new chapter in life. And so this is my why we do what we do. And so what we'll talk about today to kick off will be part one, which will get into some of the technical things. And then on part two, I want to empower you and maybe even focus in on your overall goals. Feel free throughout the presentation to stop me. We can have a few chats along the way. I have management on the time, and hopefully I'll get us out of here a little early because I believe I am the last session of the day. And so I want to make sure that happens. But part one is accounting and financial management and just understanding the difference between the two. And so what Kingdom Financial Solutions understands is that our strength as a nation depends upon the financial independence of each of us as individuals. No matter how small or large the community, in our family, we say everyone has to be able to load their own gun. All right. If we going out, you know, daddy can't stop to load your gun. So at some point in time, I'm going to need you to arrive prepared and ready so that we can co-mingle, grow together, or synergize is the best word that I like to use. And so that's an excerpt from The Richest Man in Babylon by George Clason. It was a book that was published back in the early 30s. And it's one of the first books that I hand my clients every time. And so just a little bit about accounting. Accounting causes us to look backwards. It's actually what has already happened, and we want to focus on reporting that for legal purposes. If you want to target that, the audience that you are talking to when you're doing your accounting, it's not profit or loss. It's not you. It is the IRS, the Department of Revenue. Some of those people, lenders is another example. The purpose, we are required in order to avoid penalties, fines, and ultimately they will shut us down if we don't do this properly. So what you will need at some point in time is, I believe you heard from Tina earlier today. She hails from a similar background, and you got QuickBooks Intensive or something like it that will allow you to either pay someone or manage the books on your own so that you can say exactly what happened in 2023. And right now, you're probably, if you're thinking about it, how did I do last year in my accounting? Right now would be the time that you be preparing to report. You'll be sending out 1099s, W-2s. You are actually receiving some of those things from the organizations you may have given to, or some of the credit card reports where all of your details are broken down. And so we want to make sure that we are looking at accounting. So why should you care? Again, we talked through some of these things, but just a few things to highlight on the screen. And so legal, getting loans, a lot of official things, and we don't have any exceptions. And so there's two forms of accounting from a general standpoint that you'll hear about. The first one is cash. One, it is easy to follow. However, it is difficult to forecast. And so if I run a cash-based business and I don't have a track record that I can see electronically kind of how things came in on a different month, maybe summer was higher or lower, it's difficult for me to forecast. But I know if I have $1 left over, that basically I spent $2, for instance. The accrual, and this is where it gets a little technical, is required for forecasting. And typically, there's a difference between taxes and bookkeeping, and that's where this really comes into play. Bookkeepers can look back, report, and tell what happened, but typically, your tax professional can help you forecast. Your tax professional help you forecast by having all of your reports itemized and in a place that you can actually see them. I'll pause there. That's accounting. Do we have any questions out there?
No. Nope.
All right. I want to make sure I check in. It's hard for me to see you guys, so please stop me if we have anything that comes up. Please do. All right, so taxes versus bookkeeping. Taxes are recorded by a different set of laws. Typically, the Internal Revenue Code tells us how we have to keep our taxes in order. Bookkeeping follows the accrual accounting rules, general accepted accounting principles. These are technical terms. You can get with your professional to answer this, or when we get our free session, I can break down these a little bit more. I want to make sure you have the definitions. And in the bookkeeping section, the financial management section, we'll look at the 3 different statements that you need to have in detail. And so from the financial management standpoint, the purpose of financial management is forecasting. It is what is going to happen. I'm going to make changes to optimize the future. And so once I have my books in place, or I have my tax returns and everything is now, and I can look ahead, financial management talks about the use of my funds to grow, to move forward. And so I need to really pay attention. Who's the target audience for financial management? First and foremost, you are. You are. It's how you know how well you're doing, how much assets you have, and typically how much inventory you have left over for whatever the next season is. Investors, managers, and lenders. Here's where you really need to focus, because the purpose here is to grow. This is going back to one of the Kingdom Financial Solutions purposes, is to grow, to maximize, and create freedom. And to create freedom. Some of us love what we do, but depending on how well we are business owners or how well we forecast will determine whether we're the only one doing the job all the time, or whether we're able to hire employees and expand our influence over time as well, ultimately, which creates freedom for you. And so what will you need? Excel, QuickBooks, and possibly a CFO to help you interpret the data, not just report the data or state the data as a bookkeeper will, but a CFO will help you look forward and make decisions that are specific to your business, specific to your business. Why should you care? Businesses live and die by the margins. Live and die by the margins. What do I mean by margins? We may get into this a little bit, but margins, for instance, at McDonald's, right? They probably don't make a lot of money on the Big Mac, but they make a ton of money on that cup of soda. That cup of soda probably costs 25 cents, maybe less, and they charge $1.99. And so the margins are larger, right? Another example at McDonald's would be they're the largest seller of ice cream, and they understand margins as it relates to ice cream, even though their primary marketing tool may be burgers and fries. All right, they understand where to make profits as they build their business. Revenues grow, but expenses can also grow faster. So we want to know how much money we're spending at any given time as well. And if you pay attention closely, there are opportunities to double profits without adding customers, to increase profits without adding customers. And so this is also required to grow into other locations or extend your business model or system, where you can almost expect in similar situations what you'll experience, how much it'll cost, what will help you save, and even open other locations. I talked to a former DSAPper just today, believe it or not, and she was opening a different location. And I think, so we're in Florida, I think it was a place called Olympia out in Seattle. Does that sound about right? Is there an Olympia out there?
Yeah, yeah.
It's right across the street.
Is there capital?
So she,
We sell barbecue over there.
oh, Chocolate Jones.
Finest
Chocolate
chocolate
Jones.
Olympia.
What's the name of her business in Olympia?
Chocolate Jones is her name, and she
chocolate.
does.
Chocolate. That was chocolate.
Seven-ish cookies and desserts, and her
You
cookies
got
are
it.
literally the best, you guys.
You live in Lacey?
Yeah.
I don't, but we did the PCBA with her, and she's literally amazing, and her
Okay.
stuff's bomb, so go
All right.
go there.
Chocolate Jones.
That's
Yeah,
right.
that's it.
That's
Yep.
awesome.
Yeah.
Yeah, so
Yeah,
we were
they
talking
know.
today, and she was like, I'm
That's
opening
good.
a new shop. She actually wants me to come out and look at it so we can look at things. But I was just excited because not only does she have a gift and a passion, but her business is in order so that she can make those kind of decisions. And, you know, that's what gets me excited. That's what gets me excited. It's not the best tasting burger. I know where to find it, but can we reproduce that same burger over and over again with consistency? And then do I have to be the one with my hands in the beef every single time? I want to know that. And so I want to figure out things out. How to use our finances. How do we use our finances after all that talk? One is forecasting, budget for the future, and planning for growth. It's the beginning of the year. I'll give you a quick 1-2 on that. And that is whenever I'm forecasting for the next year, and I'm going to use round numbers. Let's say you made $100,000 last year. Year was great. And now I'm planning for the future. What I want to do is I want to be conservative in my forecasting. So I'm going to budget $90,000 in my budget in anticipation of any hiccups, clients that may change. I'm not going to take 100,000 and turn it into 150 though. I'll tell you that, right? Because that may reach me. And so that helps you be a little more realistic as you look ahead. And if you're just starting a business, how do I forecast? What you may want to do is survey. We call it due diligence in the regular world. You got to call 3 plumbers to find the right price. Well, you want to do the same thing when you're starting a new business. Get with new business owners in similar lines of business and find out what some of those floors are and also the ceilings for a first year. And then you'll be able to forecast what to expect and even know if you're doing well or not. And not only that, you have people to go back to because people matter. And then higher profits. Understanding your finances can help you impact margins. We talked about this a little bit earlier, and it enables you to be more profitable. Sometimes finding the right target market, in addition to the right product. Sometimes the price changes as well. That helps us. So make an assessment of the business, look at the trends. And sometimes if I'm looking at an entire year, I say, hey, what happened in June? And then we'll have a discussion around June and how can we extend June to May and July? Do we need to lead in because something's happening around that time that's favorable, and we get to really sit down and look at that. And then capital, when applying for loans, securing investments, how much capital do I need? Is this borrow actually an investment, or am I just applying for loans? Things that you may need to know ahead of time. Maximizing margins, and then some different terms as well. Cost of goods sold, it is understanding your unit level cost, the cost of the cups, or for instance, how many cents of ketchup goes into each burger. I'm using McDonald's again. I know on the ketchup, they got a little thing you put it in. It measures it for you. You squeeze all the ketchup in and you just kind of squeeze that top and it lets out that one little droplet. But how much does that cost? Not saying you can be there today because that's detail, right? And if you're not a finance person, you may not. But someone can find that number for you. And eventually, as you grow, you want to know what that number is as well. Labor is very important. Understanding the unit cost and labor. I do understand there was some recent changes in the state of Washington that may affect everybody in the room. If you have employees, you got to pay them a little bit more. And then margins, we talked about that. The sum of your cost of goods sold and labor will equal the total production cost. And so that lets you know at least the minimum amount that I need to make, quote unquote, before I start making a profit. And that can help. Couple more terms. Pricing. This helps you with pricing, making sure that pricing is based on the higher of the minimum return on investment or the current market. The current market. The minimum return on investment is the product cost plus your minimum market, your markup, your minimum markup. So we're not going to sell anything at a deficit unless it attracts clients. You got to consider it like an investment. We want to maximize tickets, make sure we know exactly how much things cost for us. And then also in our current market, we want to make sure we leverage that as well, so we're not underselling ourselves. And then here's one that I want to make sure I transition on, and that's maximizing customer value. And that's finding the 20% of your customers that drive 80% of your revenue and market specifically to them. And I know you guys just met with Yura Lee. You did the social media conversation. She'd even be able to help you narrow in on that target group of people that's producing 80% of your revenue. And as opposed to as business owners, sometimes we focus on the 80% of people that we're not reaching, right? When really you already have a really strong customer base that you should probably expand, those 20%ers. And then the key financial statements, you've heard these before, profit and loss statements. The balance sheet, whenever you hear balance sheet, think assets and liabilities. And then the cash flow statement shows us how much cash we have. And then it also helps you project how much cash will be coming in. And so I'll pause there before we get into some of the thought process things to see if you have any questions on some of the technical aspects of accounting. Anything? All right. No questions. I wish I was live. I would pick on y'all. I sure would. Typically, if I'm there, I make everybody introduce themselves, tell me about your business. Can we pause and do that really quick? Tell me in a short amount of words, the name of your business and how long you have been in business. If we can just go around the room really quick, I'm interested.
My name's Latanya. I own A+ Driving School, and I've been in business for 10 years.
Congratulations.
Thank you.
Oh, we're going this way?
Yeah.
My name is Malou. I own a media production company, so I create content for businesses and a bunch of other stuff. Legally, I've been in business for 3 years.
Hi, my name's Katrina Simmons. I own a business. I've been in business for 3 years. The name of my business is Artistic Resumes and Cover Letters, and I also assist with documentation for my clients.
I'm Camille. I've been in business about 3 years as well. I'm doing reselling for retail online.
Garrett Whitmire, Inclusive Imagination. We design and manufacture universal design toys and games.
Awesome. I love this room.
Hi, my name-
Always a great room.
Great. Okay. Hi, I'm London Hughes. I just started on this is probably just a week. But I'm a therapist, so I do all things mental health for children and family all the way up to 80 years old. So yeah.
All right. Awesome.
My name is Roshan Yates. My company's Lifestyle Valet Shuttles and Tours, and I'm primarily in transportation and logistics.
All right.
Hello, my name is Naj, and I've been in business now for 7 years. The name of my business is Beauty from Ashes, and I specialize in skincare services.
Love the name. Love the name. I heard that earlier.
My name is Debray. The name of my company is DeBreezy Entertainment, and I've been in business for 16 years. And we do weddings, wedding DJ, event DJ, photo booths, equipment rentals, lighting, and karaoke.
All right.
My name is Julie. I sell ceramics that I make. Xeric Ceramics is the name of my business with an X. And I've been in business for 2 years.
My name's Mary. I'm also an artist. I do hand blown glass, and I've been in business for about 2.5 years.
My name is Lourdes, and the name of my business is Lulu's Bakery Shop. And it's most is special in Latino pastries, like cakes, table desserts, and everything that you can imagine about pastries. And I'm been in business for 3 years now, and I just did my grand opening last year for my new place with my actually shop now. So.
My name is Zoe, and this is my wife Alicia. We own Home's Coffee House. It's a mobile pop-up coffee experience, and we're still in the womb. We haven't launched yet, but we're building to launch by June.
Great stuff. Glad you're here. This is awesome. We're engaging the first timers. Is that everyone?
Oh, I'm sorry. I thought he was gonna let her speak, but that's another story.
That's barbecue. You ain't got to tell me. I've been hearing about it the whole time.
I'm Mr. Terry, the barbecue man, themanbarbecue.com. I've been in business for on my own for over 12 years, but I've been in this field for almost 24 years.
Awesome. What's your specialty? I'm a barbecue guy. I'm from the South.
Brisket. And I'm an alpha too.
Oh, there you go.
You said HBCU, so I'm looking at you. You might be a Kappa.
Oh, no. I did the me fi me. I call it the me fi me. I was able to.
Okay, I'm familiar with Me Five Me.
Oh, that's
At least you had a
awesome.
little alpha in you when you had the fire in there.
Yeah, I do. It's in the. It's in the. Yeah, I got friends. I got friends. So great stuff. Great job, Farah. Great job, Farah, in an amazing room. All right, so
Still got a
part
couple
Well, we
two.
got one more. We got a couple more. Yeah.
Oh,
go
couple more. I'm
ahead,
sorry.
sis.
I thought
That's okay.
I missed-
Veronica Davis, I'm with Community and Veteran Events. My niche is homeless veterans and engaging with the community. I received my first grant with the city, so I'm hosting a festival in September for the BIPOC and the veteran community.
Nonprofit.
No, it is for.
No. Oh.
That's why
Awesome.
she's here. Yes, this is why I'm here.
For-profit community services. Great idea. Great job.
I'm Kirsten. I'm an artist, former architect and urban designer, so I make art maps. Been doing that for 15 years.
Amazing.
And I gotta go pick up my kids.
It's that time.
Yeah. John paint them. So not digital. Digitized, like, but it's good on gloss.
Did we miss anybody?
That's everybody.
All right, that's everyone. So plug in my power cord here, and so one of the things we do with business owners and individuals is we point out the difference between being an employee, being self-employed, being a business owner, which is different from being self-employed, and then ultimately migrating to the stage of being an investor. This comes from Robert Kiyosaki's Rich Dad, Poor Dad. But many business owners that I meet are in the fashion of self-employed business owners. And so that means, like a doctor, who's one of the highest paid professions, that if your hands don't show up, then the business doesn't go. That means I'm self-employed. And at some point in time, we start that way, but we've been talking about creating freedom and growth and expansion. And a part of that is beginning to think to what we call the left side of the quadrant. I mean, the right side of the quadrant, and that's becoming a business owner. And for each of you, I would empower you now to think about what you do on a regular basis and begin to write out the script and call it a system. Call it a system. How you do what you do on a regular basis. And then slowly but surely, now we're entrepreneurs, and if you started that business, this is going to be hard. But this is the focus. This is where the freedom is. You got to take a vacation. One of the jokes in Marvel is what's my guy name? Doctor Strange. Doctor Strange. If you've seen the movie, he was one of the best surgeons. He was awesome till he lost the use of his hands, and then he felt worthless. He wasn't worthless, but he felt worthless because he couldn't work with what he had anymore. And so from top of the world to not being able to do his profession, we want to plan for that and project towards that. And so being the employee means I have a job. Self-employed means I own the job, but I don't have leverage. I want to cross over and begin to create, you all have businesses, and own a system. In my mind, I'm creating a franchise. I worked in nonprofit for a very long time. So my goal at that point in time was to work myself out of the room. I need to work myself out of the room through volunteers, staff, whatever that needs to be. My expertise needs to be unfolded if the nonprofit is going to reach more people. So you can understand it from that standpoint. I need volunteers to draw more blood if I'm the blood bank, if that makes sense. Or I'm going to have to hire a set of nurses who can help facilitate this process. And then last but not least, I want to encourage you to have a plan to save a portion of your income for the future. Have a plan to save a portion of your income for the future. The general rule of thumb is 10% of your income is going into a different place. The goal, I would say, and it would be 20%. And this comes from the story of Joseph in the Bible. If you know the story of Joseph, he interprets this dream for Pharaoh. And then Pharaoh says, "You are so smart. I don't know this God you're talking about, but what would you do now that you've interpreted the dream?" And the dream was about an upcoming famine, and they were currently in 7 years of plenty. And so the transition is, hey, after these 7 years, things are going to get dire. So during the 7 years, I want you to set aside a fifth part, or 20% of your income. And by doing so, that 20% will ride you through the 7 years of lack and famine. And so hopefully that story helped you consider and think about how you plan to move forward. Now, here's the thing. I'll lighten it up a little bit. Don't spend the money. Here's the second thing. Don't spend the babies either. So once the money begins to earn interest, or I have things working, I don't want to begin to withdraw from that. I want to allow that to multiply and multiply. I want you to think of that as the part-time job, or if you were working full-time and working your business part-time and then you eventually transitioned out, the 20% is your transition. It's going to be the money you put down for the future facility, the equipment upgrades, the initial staff. All of those things are going to come out of that part that you are setting aside. And so I want to encourage you to do so. Not many business owners think that way, because as entrepreneurs, we think it's always going to come because we can make it happen and we're gifted. And so while we are working the gift and our passions, I want to make sure that we have a system and a plan. And then on the screen is what I would call the 6 steps to financial freedom. We do this on the personal side, but on the business side as well. 6 steps. If you have all 6 of these things working in conjunction, you will find yourself being financial free. And so cash flow, how's my cash flow? When I look at my business or any business consultation, do we have money for an emergency? What does debt look like? And then I put in a small note there. Not only am I managing debt, but I'm striving to eliminate debt forever. I want to be the person I borrow from. I want to draw from my 20% to open my new commercial property someday. I don't want to always have to go through the traditional system. And so I'm striving to be debt free. And that keeps things in mind as we consider how much we should borrow. And then I want to make sure I have proper protection. Protect your business, protect your income. Make sure that you have the proper insurances. And if you're the only one, you're what we call the key man. Make sure there is insurance on you so that the business can continue if something happens to you before the system is in place and you haven't written it down or the recipe hasn't been passed along. We need to make sure that we have proper protection that helps us push the business forward, especially if you have heirs, dependents, partners. You need to think about those things now, insuring each other even in some cases where there may be a specific talent that is critical to the business overall. And then think of why we are here. We are here to build wealth. We're here to grow. And so make sure that that's a part of what you're doing. But not only that, as you go up the hill, make sure that you're preserving wealth through effective tax planning. We're not paying too much taxes. We have the right accounts and we're saving and opening the right types of accounts to make sure that we aren't being penalized. I'll leave it at that. And so, hey, I'll pause for questions. This is the Q&A time. But in the meantime, you can go to our website, Kingdom Financial .solutions. There's no .com. It's Kingdom Financial .solutions. And at the bottom of the page, you will see book an appointment with Wade. And by clicking on that, it will give you access to my calendar, and it will link with yours as well. Here's my contact information, just in case you have immediate questions or things come to mind after the fact. Shoot me a text, shoot me an email. And again, if you need to book a calendar, find out a little bit more about what we do, you can visit our website. So hopefully that gave you a chance to think of any questions that you may have. I wanted to make sure I left some time.
All right, I got a question. You were saying just save 10 to 20%. Would you say save that off of the gross or the net?
I would say the gross. If you had a farm, we got to think, you know, a business has gotten technical, but it used to be, I grow apples and 10 apples came in this year. That's as simple as that if you think about it. Now we know we need to reinvest in the business in some cases. But if you have a service-based business, definitely the gross, because you don't carry the overhead of most people. But if you need to reinvest 6 of those apples to grow the farm, you may want to consider it. But I would say the growth.
And then when you say save it, would you like a savings account or something more aggressive? IRA?
Depending on your risk tolerance. Very important. That's my financial advisor answer. So right. I don't get in trouble over Microsoft Teams, right? But to answer that, think emergency fund. So how much does it cost your business, and set aside 1 month, 3 months, and then stop at 6 months. And then simultaneously, I would begin to look at retirement options or savings options for retirement inside of the business, because that's a whole different set of rules. You can save more, do more. And the type of account does not make it aggressive, I would say that, or conservative. It's how we invest the money inside of that account, the type of investments that we buy. And I would say at that point in time, sit down with a professional, make sure you know your risk profile, and then act accordingly.
All right, thank you.
Hey, Mr. Robinson, so explain the advantages of an IRA, Roth and stuff, the tax. Aren't there one that taxes are taken out before or after you remove the funds or something? So if you, like if I made $100,000 for the year and I took 10 grand, then that means I'm not paying taxes on the 100,000 because I took the 10 out of the gross first. You see what I mean? And then I placed it in a Roth or IRA. Can you explain that?
Absolutely. So a couple things are happening. The Roth and the IRA, two personal account, individual retirement account. That's what IRA stands for. The description is how they're taxed. Traditionally, everything went in pre-tax and you paid taxes at the end of the year or whenever you made withdrawals. That's the traditional way to pay taxes. Roth is actually somebody's last name. You can look it up. And so in the mid 80s, a guy named Roth came along and said, how about we let people have the option to prepay their taxes? And so the Roth allows you to prepay your taxes to a certain limit. You can only put $6,000 in per year. Be careful. On the business side, you have a different set of IRAs as well. You have the SEP IRA, which is a small business IRA, for instance. You have a simple IRA. You can make larger contributions, up to $75,000 in some cases. And there is no Roth option for the business. There is no Roth option for the business. It's all post-tax. So as you make withdrawals, they want to be able to tax that money. The Roth is only available in the form of the 401k. We have that. That's pretty new. And then in the individual for the personal account. And yes. And so the last thing that I would say is think long-term there as well. You can't make withdrawals on those accounts officially. The Roth has some awesome provisions until you're 59 and a half.
Okay, I got a question. I'm thinking about not retirement, but life insurance now. And I wanted to know, as a business owner, would you focus more on like a whole life policy and like with cash accrual so you can use that money if you need to, or would you just do a term life policy?
That's a bad boy right there. That's a bad boy. I don't know where you got that question from.
Hey, I'm thinking about my life, bro.
That's a great question. It's a great question. And I would say both in the sense of what they do. When you think of term insurance, term provides you with an umbrella. For a low amount each month, you get to insure everything. You can buy $1 million, right? And it'll cover things, but it's not permanent. And so typically, for the same amount of money, you're going to buy less insurance, but it's going to be permanent. And as the gentleman mentioned, I don't know his name, but I can see where he's sitting. You can actually place funding or money in those accounts to be used for your business, free from taxes, and you're not subject to the stock market growth. And so, yes, long term, I am down for the permanent insurance. Everyone needs it. It's how we transition our assets to the next generation. Part of it. But while I'm going up the hill, I'm a young husband, for instance, when I was younger and the kids were smaller, and I'm responsible for their education or their college funding, but I hadn't saved it all yet. I was 25. I wanted to make sure I had a term insurance policy to cover all of those needs so I didn't leave my family with a burden. And if you apply that to your business, I'd be thinking the same thing. Maybe you need term insurance for the short term, but permanent for real. That's the ultimate retirement vehicle, I would say, is that, and I'll use the name Index Universal Life Insurance. It's probably the ultimate retirement vehicle out there for businesses and individuals.
Thank you for that.
Yeah. Great question.
One more question.
Where are you located?
I am in Orlando, Florida.
Sneaky map.
That you was in Federal Way or somewhere.
One more question.
But I do make it across the pond a few times a year. So looking forward to some barbecue, and I love to connect with the business owners at that time as well.
One more question, Wade.
One more question. Earlier in the presentation, you had mentioned like making sure you have insurance on yourself. And Roshan just reminded me of that. But were you referring to life insurance or a different type of insurance?
You're talking about Keyman insurance.
Come on.
Yeah, specifically Keyman.
Keyman?
And then,
how do you spell it? Keyman?
Yeah, like the key person in the business. If we're providing jobs or services that people depend on, the business should have a plan to move forward. And that's where, if something happens to Wave, I need to have a plan in place, at least in the short term, until the system's in place. Once the system's in place, we're making money, there's enough savings, then there may not be a need for some of those things. But while it's being built, yes. And definitely, if you have a partner that provides something very specific that you can't instantly replace.
All right, thank you.
You know that.
Any more questions, thoughts? All right.
Seal delivered.
Thank you.
Thank you very much.
My pleasure. My pleasure. Hey, I'll tell one last joke. Sorry for being last, y'all.
Yes.
That was, oh, he's not, sorry. Just kidding.
Appreciate it, Wave.
My pleasure. See you soon, David, and everyone on the Kaitita team. Thanks for having me.
Thanks,
Bye,
Wade.
y'all.
Thank you, Wave.